The price of Bitcoin, BTC, has dropped by almost 30% in the last 7 days. The number one crypto by market cap dropped below critical support as macroeconomic conditions worsen for risk-on assets. The general trend across global markets seems to point to the downside. Related reading: Bitcoin 3-day chart indicates March 2020 crash recurrence. At the time of writing, Bitcoin trades at $22,400 with a 4% loss on lower time frames. The downside price action is on par with losses last seen in March 2020. At that time, the crypto market and traditional market crashed due to the spread of COVID-19 and the lockdown measures imposed by world governments to slow it down. The 2-year pandemic shut down economic activity for certain sectors favored the increase in global liquidity. The latter was caused by central banks around the world. In order to prevent the global economy from crashing, these financial entities expanded their monetary supply. Thus, there was more money to buy things. A portion of this money fled into the crypto market, and what once a March 2020 crash became a March 2021 rally when the price of Bitcoin soared beyond $40,000 en route to an all-time high at $69,000. As BTC's price and other risk-on assets trended to the upside, and central banks printed more money, inflation skyrocketed and reached a 40-year high on the US dollar. The US Federal Reserve, FED, is trying to stop inflation, and risk-on assets are paying the price. According to trading desk QCP Capital, the current downside price action was triggered. Follow the URL for the full article. For more on this story, visit the news article link.